Good morning, futures family. It's time for the market prep. Thursday, June 1st already. It is hard to believe this year is flying by. My name is John Hogan. Thanks for trusting me with your time. As always, our focus is on accurate context, good risk management, and remaining patient. First off the bat, I got to retract something I said yesterday. I said that mortgage rates were lower, actually. They were higher. I transposed the numbers. They went from 6.69% on average to 6.91%. Got that out of the way. What are we looking at this morning as far as economic numbers are concerned? 7:15, the ADP employment report came out. They revised the last one a little bit lower, but they were expecting 170,000. Came out 278,000. So they blasted that one right out of the water. Jobless claims also came out at 7:30 this morning. They were looking for 235. It came out 232. No shocker there. Continuing jobless claims also a little bit lower at 9 o'clock today. We're looking forward to the ISM manufacturing index and construction spending. 9:30, the natural gas numbers come out, and then 10 o'clock, the EIA petroleum's report comes out a day late because of the holiday on Monday. What are we looking at this morning? Well, U.S. equities are kind of remaining a little bit, I'm calling it stoic. Is that the right word? After the House passes the debt ceiling bill, now it's off to the Senate. It's 2 weeks prior to the FOMC meeting, and a lot of Fed members are mulling the Shakespearean question, to pause or not to pause. That is the question. More employment data today and tomorrow may help some of the talking Feds to decide 2 weeks from yesterday is the FOMC meeting. Crude traders are awaiting the day later EIA report, right? Expecting about a 1 million barrel draw in inventories. That's what I think they were expecting last night for the API, but that came out a surprise 5 million barrel boost in inventories last night. So we got the crude oil kind of, in a downside auction. How good is it doing? We're going to take a look at that shortly. This morning, the VIX is down a little over 2%, 17.46, where it was 1802 yesterday at this time. Dollar index down also at 104.24. It was 104.44 yesterday at this time. And the yield on the 10-year just about even like yesterday, 3.64% today, 3.65% yesterday. So no major changes in the rates here so far this morning. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Please subscribe to our YouTube channel so you can get notifications when we do go live. And looking forward to seeing who's here this morning. We have Scott Saw and he conquered. First one in the room. Scott, you win the prize this morning. Steven, good morning. Haggle Matters, Shaw, Pete, Will, Matthew, taking back what he said in the group coaching, open test drive versus open rejection reverse. It's not about the TPO prints. Testing a known reference before rejection is the difference, it seems. Well, that's going to be true sometimes, and maybe not so true sometimes. Remember, Matt, nothing is finite in trading. Nothing happens exactly the same way twice. And once you get the right answers, the market's going to change the questions. Alejandro, good morning. Vlad, Grounds Hero, Chad, John, JD Royalty, Bill Phillips, good morning. Shy T, the Rooster, Charles March, Robert, good morning to the trading family. I love that. James, Brian, Shaw, Courvoisier music returns. um, John, Kaylee, good morning. George Duque, good morning. Joe, Edge is Joe's word for the day. Edge, good morning, Joe. Will, what is this music? 70s Shaft music theme. There you go. Sarah Hall, good morning. Prayers and love to you as always. Uh, Jack experimenting with some new styles, trying to make something more hogish for the intro. Very nice. I do enjoy a nice Courvoisier once in a while. Stephen, good morning. Marco, Orion, good to see you. Nasdaq, Jason, Nisa, good morning. Michael, Alfred, Rob T. Yes, not often in the morning, but we might give that a try one of these times. We always used to say, don't drink and trade. I'm going to bring the link for Make Hogue Money, which is right after the prep here, as soon as it pops up for me here. And I look forward to seeing everybody there. And then we also have today, we also have today coach's office hours. The first link is for Make Hogue Money right after the prep. And then coach's office hours is going to be after that. That's about 11 to about 12:30, I think. I'm going to be speaking in there today, talking about entries, exits. I don't have that link handy. I apologize, but maybe we'll see you there. If you're in the Discord channel, I'm sure that it's being posted quite a lot in the Discord channel. So, okay, I think we've taken care of business. We're going to jump into the charts pretty quickly here so we can get on to Make Hogue Money before the open. Taking a look at the E-mini S&Ps, the daily chart. Okay. Downside brings a little bit of volume yesterday, but we lose in open interest. Now, remember, we're coming into rollover. We're at the front edge of it. We lost 43,000 total in open interest yesterday. 48,000 of that was actually in the June contract. So we actually added contracts in the September contract. I mean, that's what makes rollover so blurry, because you're kind of balancing. You've got the longer time frame, working on getting a cheap rollover into the future month. It just makes it a little bit more difficult to read open interest and volume during rollover. There were a lot of discretionary direction traders, just scalpers, people trading in the pit, that would take the 2 weeks of rollover off because the market just doesn't act the same. And and I think this is part of the reason is the longer time frame is trying to get a cheap rollover accomplished, or even make money on the roll from the current front month to the next front month, which is again going to be the September SPUs, SPU. Can you believe we're talking about September already? It's only June, but that's the way it goes. So what is this market attempting to do? It has been for 3 days attempting to move lower. Is it doing a good job? Again, a hard read coming into rollover, right? So with all the information, with everything that's going on with the debt ceiling, and knowing we have unemployment tomorrow, we may, if there's no news as far as the debt ceiling is concerned, find ourselves kind of range bound today. There's a lot of speculation on both sides. There's a lot of hedging. There's a lot of liquidation of positions because nobody wants to get whacked if should something go crazy with this debt ceiling thing. So I think and then again, knowing we have unemployment tomorrow, there's going to be a lot of positioning and posturing and just getting ready for whatever is going to happen. So is it doing a good job? I'm thinking not really. I mean, We had some decent volume yesterday on the way down. Again, losing open interest, but gaining a little bit in the September contract doesn't help us much. Is this going to actually play out to be a bull flag? So no overnight inventory. We're right in the middle of the range from yesterday, inside range, inside value. Stay patient. It's part of the reason why I think my main hypothesis is we're likely to remain range bound today unless something happens. And ACH, anything can, right? We all know that. It's our one of our acronyms here is anything can happen, and we are in one of those situations. But because we're in the middle of range and middle of value from yesterday, I'm going to be patient today. I'm going to look for good trade location as the day goes on. No gap, no overnight inventory, no rush to get into anything. If we do end up breaking out, I mean, this isn't a strong trend line. It's really just to kind of cap off where a breakout of a potential bull flag might begin. I don't really have that much trust in this trend line or even the lower trend line because we've only got 2 points of contact. One of the points of contact was just last night's high. We're right in the middle of range. Stay patient. You guys probably get so tired of hearing me say that, but it's so important, right? Patience pays. Here's the profile from yesterday. It's a normal variation trading day. I'm calling it somewhat neutral, but it's a little bit extreme. I mean, the volume point of control is all the way down here. The TPO point of control is up here. So there's kind of conflicting information in this, right? We have a low excess high. We have a low excess low. This market is looking for a reason to seek new levels to facilitate trade. It just doesn't have it yet. So what are we doing? Take a look at the composite. This composite profile goes all the way back to the beginning of April. Look at our range from yesterday. We had a relatively even kind of bell curve. We've been adding time, and that tells us that prices is accepting higher levels, at least for now. We've been moving value up. Look at our overnight low. It's the composite value high. Value high since the 1st of April is our overnight low. That strikes me as somewhat important today. If we open outside of it and we accept the inside of it, does that mean we head lower? It could. It could. If we reject value, does that mean we go higher? It could, but we don't know. We don't know. So we're going to trade what we see. Sitting here in the middle of yesterday's range and value area just tells me I can relax. I can say, okay, there's no real change in the perception of value of the S&Ps because there's so much information yet to come out. We're going to chill. We're going to look for new opportunities as the day goes on. I mean, even our overnight session is inside the regular trading hour session from yesterday. Chill, baby, chill. All right. Crude oil. So the downside move yesterday does bring a little bit of volume. It adds a little bit of open interest, 2,200 contracts. That's the preliminary. It could be different than that, but it doesn't necessarily impress me that much. So our downside or breakout auction grade, I'm kind of giving a B, and I think that's a little generous. I want to see more sellers bailing into this to see this market continue to the downside. Don't forget, everything below where we're at now has previously been excess this year, even further back. I mean, we haven't been down to this level, since January of 22, except for here. So don't think it's doing all that great a job. It is succeeding in the downside auction. Now we EIA today, so we've got the API. I forget what it said, but we're looking for a small. What are we looking for? We're looking for a 1 million barrel draw by the EIA. API was a surprise 5 million barrel boost. Well, price has to go higher, right? It always seems to do the opposite of what you would think. Take a look at the 30-minute chart here. No overnight inventory. Waiting for the EIA, you think? What do we have here? We have an overnight range that's inside the regular trading hour session from yesterday. We're holding below value, but right in the center of yesterday's range. There's very little change to the perception of value of a barrel of crude oil, is what this is telling me. So again, I'm going to try and be patient and wait for opportunities. Market yesterday, the additional open interest looks to be longs coming in. We have delta higher for the better part of the day. Are these longs shorter time frame speculators? I would have to say yes by looking at the delta. Short time frame speculators use market orders to get in to the market. So we see a lot of market order buying coming in with an increase in open interest, shorter time frame potential speculative positioning. That's not the bigger, stronger money. So again, stay patient. Here's the TPO chart. So a normal variation day, IB extreme, the low of the session. Most of the day was traded actually above the halfway mark. We didn't close very well, which also tells me that the move to the upside was probably shorter time frame traders that were looking for a bigger move to the upside and got out before the close. Where are we now? We're right in the middle of yesterday's range. This P shape on these TPO profiles is generally indicative of short covering, but that would remove open interest. So I'm thinking we added some speculative longs on this day yesterday. Many of them probably got out before the close. Many of them are probably still holding. What we need to continue to the downside is new business. We need downside movement, increasing volume and open interest. Then we'll give this auction to the downside an A. Hopefully it won't be too late before that happens. What about the Nasdaq? All right. Normal here, let's just start with the daily. I'm getting a little ahead of myself. So downside attempt cuts volume yesterday, a little bit lower volume. We added 2,000 in open interest again, somewhat inert, right? It is in rollover. So this market is in rollover, and like the S&P is awaiting a lot of data, awaiting a lot of information. What are we doing? Well, largely we're inside extended trading hour range. I think we're just outside regular trading hour range. Take a look at this on the 30-minute chart. So here, again, a potential bull flag. I don't necessarily trust these trend lines because largely they're just to contact, just showing the kind of shrinking move to the downside here. We did add volume and open interest in the Nasdaq yesterday. All right, we did lose volume, but added open interest yesterday. So the loss in volume on the pullback here might be somewhat indicative of a potential bull flag. Our overnight high is one of the points of contact to this. So I'm not really sure how much I trust these trend lines. Again, looking horizontally, we're right in the middle of range with no overnight inventory, no gaps, no runs, no hits, no errors. Nobody left. Patience. Again, we could just see this market range bound today with unless some new information comes into the market. Everybody's waiting for unemployment. Everybody's waiting for the debt bill to pass the Senate and get signed so we can move beyond this. So here's the TPO chart. Normal variation, IB extreme high. By the way, 5 out of 7 of our markets had the initial balance at one extreme or the other of the regular trading hour session. I think I'm going to add that and kind of keep track of that because it happens a lot. We get 5 out of 7. That's sometimes pretty good odds that does tend to happen a lot. Okay, so normal variation, I'm going with a neutral day, excess high, and a weak low. A weak low. It's indicating a potential unfinished downside auction here in the Nasdaq. Seems strange to even say that in the Nasdaq lately, a downside auction. But we did not leave excess at the low yesterday. S&P's traded down to here, even maybe deeper than that. Gold. All right. There was an attempt at changing the market state yesterday. We have this trend line 1, 2, 3, 4, 5 points of contact. We traded down to it yesterday, and we've been holding above it. Did it perform well? Volume was okay. It's still kind of finishing the roll to August here, but we lost open interest. So the auction breakout grade, I'm being generous with a C. We need new business to continue this move to the upside. We going to get it, Rick? Here's the 30-minute chart. All right. So gold yesterday. Attempted move to the upside, necessarily close all that well. Value continues to roll higher. We took a deep look lower last night and didn't hold. Now we've had the market kind of open below range and value. The numbers came out at 7:30. The 7:15 numbers came out. The 7:30 numbers came out. Took it all back. And we did, if we opened outside of range and value, we've already taken care of the value special situation play. If we get an opportunity with the market in the state it's in, I'm looking for chances to buy weakness in this market, but it's going to be, I think, tough and complicated to do so today with the situation as it is. So be cautious. Here's the TPO chart from yesterday. Normal variation, neither extreme at the IB. The market used up a lot of facility yesterday. It makes sense to me that it's likely to continue to look for new areas to facilitate trade. But again, we need new business. I'll be monitoring for a possible delta divergence at some point today. Right now, we're not seeing that because a delta divergence where price continues to push higher on lower or negative delta, it might be indicative of what I think this market needs to continue an upside move. A little weakness in the dollar wouldn't hurt either, but I don't really want that. Here's the euro again, still stuck. It's toeing the line on both sides, the trend line and weekly kickoff low. Yesterday, we added 8,000 in open interest. Volume was good on an attempted move to the downside that seems to have failed. We have a pretty decent excess low here on the daily above weekly kickoff low. But between the weekly kickoff low and this trend line, I'm looking at this as balance to breakout rules apply. Balance rules, we fade the extremes, the trend line and weekly kickoff low. Acceptance above the trend line, we go with. Acceptance below weekly kickoff low, we go with. So some pretty almost kind of simple rules to this, but unfortunately, it's really never that easy. So here's our upper trend line. Here's weekly kickoff low. Do we have overnight inventory here? We were maybe a little bit long before the numbers came out, but I think that's all been reconciled. So I'm not looking for a pullback according to overnight inventory. I'm looking for opportunities to actually fade this trend line. If it breaks out and comes back to it, we could look for a long. We're looking for acceptance outside of these lines. If we remain showing acceptance inside, we fade those extremes. I like these situations like this because I can severely limit my risk. And that's game one. When I'm thinking about a trade, I'm thinking risk first. Where does price have to go to prove me wrong? How cheap can I get into that trade? It's going to be an interesting day in the euro, it seems. All right. We do have a weak low. We had an excess high. IB extreme on neither side. Market is kind of voting for repair. When we have a gap here, we may close the gap. We had a weak low day before yesterday. We've got a relatively prominent point of control here, and we've got a naked point of control here. Why am I always talking about points of control and naked points of control? Because points of control are they're the most popular or most voluminous prices, and they're a kind of a comfort level. So when we move away from one that we leave unchecked or naked, the market has memories, right? It's like muscle memory. The market has a tendency to try and go trade to those comfortable levels. We're always seeking comfort as humans. Why would markets be any different? I don't like trading in those comfortable levels, though, unless it's a naked one that we kind of get to, because sometimes those can be good targets and or opportunities for executions. So I think we get up to where we're kind of trading pretty close to that trend line, which is basically our overnight high. Here's the 10-year. So really kind of coming into the back end of rollover here. Started to see some decent volume yesterday, but I think the short time frame upside auction is actually performing relatively poorly. We lost open interest of 28,000 on the upside move yesterday. Doesn't mean things can't change. We're seeing the market trying to continue this move to the upside today. Here's the 30-minute chart. The numbers came out. We were in range and in value. We have now rejected value. If we continue to reject value, an opportunity may come to us at weekly kickoff high here. Make sure that's correct. 1430. Yes, 114.30. And other than that, I think I'd be looking to try and buy pullbacks. I mean, we opened below this trend line. We came right back into it. So coming back to this level might be an interesting spot. Here's the TPO chart from yesterday. Excess low, excess low, excess low, weak high, weak high, weak high. This is all indicating an unfinished upside auction. Again, that 1430 level is an area of potential failure of this upside auction or a potential acceleration above that level. Pretty decent move here this morning. But again, I wasn't all that impressed with the open interest yesterday. We lost 28,000 in open interest, which, with a contract with more than 4 million in open interest, is that really a big deal? Here's the natural gas. We got a downside auction. This market is one time framing on the daily chart. I'm not going to be stepping in front of this. We broke out, held below the weekly kickoff low on Tuesday, Wednesday, Thursday. Volume has been good the last couple of days. We added 15,000 contracts to the downside here. This downside auction, and I'm being mean, it has been getting a B. So the auction to the downside has been presenting and remains to be presenting as a healthy downside auction. The last thing I want to do is to start trying to pick bottoms in this. Now that I've said that, there's probably a bottom here somewhere. These markets love to make a liar out of me. All right. Here's the 30. Come on, mouse. There you go. All righty then. So yesterday, there we go. Yesterday we had the big pop, right? Rejected. So why is my mouse doing this? Maybe need a battery. Rejected, continued to close below value, still kind of same as the day before. But, you know, look at what we're doing now. This move to the downside added a lot of open interest. That open interest is probably newer sellers, newer shorter time frame sellers. Look at Delta. You look at Delta now, we're minus 1,600 already. So not necessarily seeing that this is longer time frame, although it very well could be. Sometimes the longer time frame is forced to do things that they don't normally do. And if they started barreling into this market using market orders, look out. So if I can't get in, as markets that are directional like this have a tendency not to let you in, the last thing you should think about doing, and please do not do this, is start trying to pick bottoms. This has to be the bottom. You buy it, you get stopped out. Can't go any lower. I'm going to buy this bottom. You buy it, it gets stopped out. You buy it, you get stopped out. Before you know it, you've lost $1 million and your kids don't go to college. It's just not the right thing to do. This market is directional. It is mean. It is nasty. If it won't let you in, don't try and go the opposite way. Even Jim Dalton says that's one of the things that retail traders and newer traders, one of the biggest mistakes they make is trying to pick bottoms in directional markets. If you trade the natural gas, don't try and pick the bottom. It almost seems like this thing could go to zero. Excess high, weak low, continuation possibly to the downside. We've got a gap. Oh man. It's a pretty healthy downside auction. All right. So got a couple of minutes here. We'll get into Make Hogue Money. Looking forward to seeing everybody there. Randolph, hopefully you're going to be there. I see you're watching the prep this morning, so it's good to see you. Yes, markets can remain irrational longer than you can stay solvent. How about it? Sam, the ES, what can we deduce from the increase in open interest but decrease of volume? Well, the open interest decreased yesterday. It depends. It depends, dude. It's all situational and context based. Murat, I use regular trading hour session only. And then some of my charts I'll have extended trading hours separated from regular trading hour session. But because of yes, a lot of that can be something from the rollover. We kind of talked about that when we were in the charts. It's coming into rollover. Volume and open interest get very blurry. Not that it's ever crystal clear, even when it's not rollover, but it's harder to read. For Make Hogue Money, you'd come to the Zoom. Here's the link again. Copy. There it is. There it is. Oops, paste. There it is. There it is. Yeah, we're going to be kind of moving from Zoom and doing Make Hogue Money on YouTube, but we're going to phase our way out of Zoom and start using YouTube for it, hoping to find a way to invite people into the session, kind of the way we have been in Zoom on YouTube. So we're going to get this all figured out. Let's get to it. Let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. If I don't see you for Make Hogue Money, have a great session. Probably try and do a reflection at the end of the day today. We'll see what happened. throughout the day. And make sure you're kind to yourself and others. Say a prayer for peace, and I'll see you in a few minutes. Have a great day.